Hmm. So basically, when we say debentures, then debentures basically goes towards bonds also. Debentures are majorly unsecured, right? So when we are talking about debentures, we are talking about unsecured market, unsecured debt market. And in bonds, they are mostly debentures or they are called as non-convertible debentures, where they are not converted into equities. They have certain categories or they have certain terminologies which remains fixed with them, and accordingly only we have to decide that which particular bond we take it. And few of them have security attached to it. Security attached means few of them have assets attached to it. In case of liquidation of the company, the investors of the debentures or the bonds will get their primary principal back, because there is a certain principal, certain asset is attached to that. It could be your raw material, it could be any fixed asset, or it could be anything. So that is attached to it, and the investors get their principals back. And some of them are called bonds, right? So bonds have certain terminologies. So first is face value. That is in one line, if I have to explain, it is basically nothing but what is the value of the bond. For example, today, if you go and let's say uh, girls are more into shopping, so I'll take an example of Louis Vuitton purse. In case you want to buy a Louis Vuitton purse, and which is like, let's say, not available in Nimrana, right? It directly comes from Paris. Since you understand which is original and which is not, let's say the purse value is 10 lakh rupees, the original purse value is 10 lakh rupees, and you both know that it is not available in Nimrana. Leave aside Nimrana, it is not available in India also. But somehow it has reached Nimrana, and you have found out that this is an original one, right? So there is only one purse, you both want it, and by the grace of God, you both are able to buy that purse of 10 lakh rupees. So the value of the purse is 10 lakh, which is the face value. Now, thing is, ki the person who is selling it, right? He saw that there's a demand in the market. Demand is two, and supply is only one. So he said, I will be selling it not at a 10 lakh, I will be selling it at 10 lakh 20,000 rupees, right? So Ananya ma'am said, okay, I will buy it. Srini ma'am said, can I 20,000 rupees? I will not be giving it extra. It's not worth 20,000 right now. So I will not buy it right now. So Ananya ma'am bought it, right? So it she bought it at 10 lakh 20,000. The thing is, key purse has an you can say condition attached to it, that after 10 years, if you give this purse back or return this purse back to the company, company will give you face value. That is 10 lakh rupees. What is the cost of the purse, right? So in case if Ananya ma'am keeps that purse for 10 years and returns it back, after 10 years, what will she get? She get 10 lakh rupees back. So face value is something which a investor gets back at the time of maturity. That is the principle which remains intact. That is the base amount on which your coupon rate is calculated. That is the amount on which other your yields and everything else is calculated. So that is the base amount, and that is one which investors get back at the time of maturity. Now a little more example, if we extend this first example, let's say that after 2 years, Ananya ma'am has bought it for 10 years. Now after 2 years, Shireen ma'am says that Louis Vuitton purse looks very decent, and 8 years it is worth buying it. Now she wants to buy it or she wants to purchase it, and Ananya says ki I will not be selling it at 10 lakh 20,000. I want to sell it at 10 lakh 50,000. And Shireen ma'am is okay with that. So Shireen ma'am will buy that at 10 lakh 50,000. Now here 50,000 is a premium. Like 20,000 was the premium, here 50,000 is the premium. Because Ananya ma'am gave 10 lakh, which is the face value, plus premium of 20,000 to buy it. Now Shireen ma'am is giving the 10 lakh face value plus 50,000 of the premium to buy it, right? Ananya ma'am got back her premium, right? Because she spent 20,000 as a premium and she got another 30,000 as a premium. So she has got capital gain of 30,000. Got it? In the same way, bonds also behave in the same way. When demand increases, their premium increases. But let's reconsider our case that after 2 years, it has been found that there are a lot of Louis Vuittons available in the Nimrana, and there's a lot of options available, and you two are only the buyers, right? So Ananya ma'am is already having one. She doesn't want more. Shireen ma'am now goes to the market and she sees that the face value is 10 lakh. That means if she purchased the purse and send it back to the company after 10 years, which is the maturity date, she will get 10 lakh rupees as it is. But in the market, it is available at 9,80,000. That means it is available at discount. So if she buys that purse at 9,80,000 and she gives back to the company at the time of maturity, which is 10 years, she will get 10 lakh rupees. That means she has the benefit of 20,000. Correct? So right now she's buying at discount. Ananya ma'am bought it at premium. Shireen ma'am is buying it at discount. Now this discount in premium is decided by the markets. How, that we'll understand. But first, let's understand the terminology. So face value, we understood what exactly face value is. So face value is something which is the base value which a investor gets back at the time of maturity, right? That is the principal, initial principal invested, right? Second is coupon rate. Coupon rate is nothing but interest rate. But how we have discussed in the class, right? Ki why it is still called coupon rate? Remember?
Yes, yes. We have given like papers,
Correct.
coupon, we pluck it
So
out.
coupons were attached. That's why it is coupon. Yield to maturity. Did we discuss in the class? Yield to maturity, YTM? No. So in our example, let's say that when you bought that purse of Louis Vuitton, 10,20,000. So Louis Vuitton said that every year they will be giving you 10,000 rupees of interest. Every month, 10,000 rupees of interest. That means on an average, they are giving you 12% of return. 12% of interest they are giving it to you. That means coupon rate is 12%. This is what they will be giving it to you. Now, just understand in a simple way that you bought a purse whose face value is 10 lakhs. You have given a principal of 20,000. Oh, sorry, premium of 20,000, correct? And you are getting interest of 10,000 per month. That means 1,20,000 per year. If you have kept this purse for 1 year, and let's say just for the simplicity that maturity is for 1 year, that means after 1 year, if you return this purse to Louis Vuitton again, you will get back 10 lakhs, correct? Plus you will get back 1,20,000, which is interest part. The only thing which you will not get is premium, which you have paid. That means if we write it mathematically, so we have expense out. Let me see if I can get some whiteboard. I'll write it down over there. I'll open a PD Word format where I'll write it down for you guys. Hope this page is visible to you.
Yes, yes.
Great. So face value was 10 lakhs, right? Premium paid 20K, right? Interest earned
12%.
1,20,000, right?
Yes.
So at the start, total outgo was how much?
10 lakhs.
10 lakhs plus 20K.
20,000. Yeah.
Correct, which is equals to
10 lakhs.
10.20,000, right?
Yes.
Is it correct?
Yes, sir. Yes, sir.
Yes, sir.
Ayan, Anirudh, is it correct? Are you with me?
Yeah.
Okay. हर्ष नाम नहीं लिया लेकिन इसका मतलब ये नहीं कि आप नहीं बताओगे. होप यू विद मी. हाँ, होप यू विद मी, राइट? कहीं नहीं समझ आया तो बोलना. नाउ दिस इज द इनिशियल आउटगो, करेक्ट? नाउ टोटल इनकमिंग टोटल अर्निंग्स विल बी at the end of year. This will be 10 lakhs. Your principal will be given back plus 1.2 lakhs of interest. Correct.
Yes.
That will be your total incoming, total earnings. It will be 11.2 lakhs.
Right.
Right. So net earning now, net earning
1
will
lakh.
be correct.
Sir,
It is
period
1
is
lakh.
10 years, right?
No, no.
One-
Right
one
now
year.
we are considering for 1 year.
Okay, okay.
For the ease of understanding.
Okay,
So
okay.
net earning is 10.2 minus, oh sorry, 11.2 minus
10.2, which is 1
10.2,
lakh.
which is equals to 1 lakh.
Right.
Is this clear? Clear to everyone?
Yes, sir. Yes, sir.
Great. So coupon rate was 12%, correct? Because of which we were getting 1.2 lakhs. Coupon rate was 12%. That's why we got 1,20,000.
Yeah, yeah,
Right?
yeah. Yes, sir.
Correct. But net we got 1 lakh. If we divide 1 lakh by 10, what will we get? 10%.
Yeah.
Coupon rate was 12%, which we actually got. But net effectively we got 10% because 20,000 was another expense out of our pocket.
Premium paid, yeah.
Correct. So this 10% is called yield to maturity. Yield to maturity in simple terms is what exactly we get.
Okay.
Got it? So yield to
Yeah.
maturity is something. Now here the thing is ki yield to maturity is not that simple concept. It is leftover. Yield to maturity is basically something called as, now understand this example a little more. You are getting 10K every month, right? 10K you are getting at the rate of 12%, correct? You have invested 10 lakh rupees. You have invested 10 lakh 20,000. 20,000 is a premium. So your net investment counted for calculation of interest is 10 lakh, which
10
is the
lakhs.
face
Yeah, yeah.
value, right? So
Yeah.
10 lakhs you have invested. On the 10 lakh, you are getting interest of 12%. So 12% means 1% per month, 12% per annum. Remember, I told
Yeah.
you that if nothing is written in front of percentage,
Right,
that
right.
means this percentage is per annum. If nothing
Right.
is written, then by default, this percentage is per annum. So 12% per annum means 1% per month. 1%
Right.
of 10 lakh is 10,000 rupees. That means 10,000 rupees you are getting every year. Here
Yeah. Month.
every month, sorry. Here we are
Yeah.
calculating simply what net is coming to our pocket. And we are calling it as a yield to maturity, right? So this 10% we call as yield to maturity. Yield to maturity has one underlying principle also in practical calculations. That underlying principle is that here we are getting 10,000 every month, right? We have our maturity after 1 year. Maturity after 12 months. Let us write it down practically.
First month, second month, like this,
Jan,
huh?
Feb, March, April, May, June, July, August, September, October, November, December, right? In Jan, we got 10K
Right.
as interest, right?
Right.
Again 10K as interest in
Right.
Feb.
Yes, sir.
Yes, sir.
Similarly, 10K in every month we will be getting as an interest.
Right.
Right? Now thing is yield to maturity says that this 10,000 you have theoretically opportunity to reinvest this 10,000 at the same rate which you are getting on your original principal. That means this 10,000 I can reinvest at the same rate. That means at 12%.
And 12%, right.
So if I want to reinvest, let's say the first month I invested on 1st of January. I got
Right.
its interest on 1st of February, right? So this is my January's interest, January month's interest. I got it in the on the date of 1st February. When 1st February or 31st January, last day of the month, you get the interest for full month. So I get 10,000 on January 31st. Now, if I reinvest this 10,000 at the rate of 12% till maturity is now I am left with only 11 months because maturity was for 12 months. I am left with 11 months. So if I invest this 10,000 for another 11 months at the rate of 12%, I will earn some interest onto it also.
Right.
Correct. So quickly tell me what would be the interest earned on this 10,000 at the rate of 12% for 11 months?
Per month 1200 rupees.
Per month 1200 rupees नहीं होगा ना, per month 100 rupees होगा. Per month 1% आएगा ना?
Oh, sorry. Oh,
है ना?
it's up 12 per annum, right?
Correct. So if
Yeah.
I have
So
to
totally
invest this,
1200.
so per month 100 rupees, and how many months are left for this particular month? Because
11.
11 months. So
11.
this multiplied by 11, which is equals to 1100. Got it?
Hmm.
In the same way, if I invest all other amounts, what happens is I will be having certain period missing. Here it will be 10 months,
Hmm.
right?
Hmm.
Everyone with me?
Yeah.
Yes.
सबको समझ आ रहा है?
Hmm.
Here it will be 9 months
9, 8, and so on.
and so on. So that means I will be earning this amount also. Correct? Let me open the Excel. That will make it more quicker. Because word में type करने में बहुत problem होती है. Is it visible?
Yeah.
Great. Jan, Fab, right?
Hmm.
10,000 every month. This is, I will be getting 100 rupees per month on reinvestment.
Yeah.
I'll be invested for 11 months. So I'll be getting how much?
1100 rupees.
This multiplied by this, right?
Yeah.
This 100 will be constant. This will be 10. Got it?
Yeah.
How much we got extra? 6,600.
6,600. Yeah.
So initially we got 1,20,000, right? Now
Yeah.
we got 6,600,
Hmm.
but we spend how much? 20,000 as a premium also,
Hmm.
right? So net we got as
1,06,600.
1,06,600.
1,06,600. Our investment amount was 10 lakhs,
Yeah.
right?
1,06,600 divided by 10 lakhs.
This divided by
10 lakhs.
10 lakhs.
This is the actual yield.
So if I convert into percentage, then equals to
10.66%.
this multiplied by 100, which is 10.66%. So my yield is 10.66, right? I have taken it in the first step, but yield to maturity, YTM says this 1100 is again reinvested.
Oh,
For practical purpose, I'm telling you. So it keeps on compounding,
okay.
right? Though the impact is very less. After this, if you go to the second step, then you might end up coming near to somewhere around 11%, not more than that.
Yeah.
Right? So for practical purposes, usually beyond this is not calculated. But theoretically, yield to maturity says that every penny which you get, you have an opportunity to reinvest that penny at the same rate as your original principal is invested.
Okay.
Is the concept clear?
कॉन्सेप्ट क्लियर बट सर एक डाउट था सो जैसे इनिशियल अमाउंट इन्वेस्टेड इज 10 lakhs राइट
हाँ
तो अभी उसके बाद में जो इंटरेस्ट है 10,000
हाँ
वो अपने कहाँ पे इन्वेस्ट कर रहे हैं वेयर इज द दैट प्लेस
वो theoretically ये माना जाता है theoretically it is assumed that you have an opportunity to invest it.
ओके
So for calculation purpose, though practically as I say कि जब मैं bond देता हूँ किसी client को, client के पास interest उसके account में आया,
हाँ
right? Client usually कुछ नहीं करता उसका,
नहीं
client
करे,
उड़ा
हाँ
देता
वही
है, client उड़ा देता है. अब वो ऐसे उड़ाए या कॉफी पी के उड़ाए, कैसे भी उड़ाए, वो उसकी इच्छा है, right? क्लाइंट स्पेंड कर देता है, या वो 10,000 रुपए को बोले 10,000 रुपए कहाँ इन्वेस्ट करूंगा, पूरे 1 लाख इकट्ठे होने दो, फिर उसके बाद इन्वेस्ट करेंगे. आई मीन क्लाइंट वेट्स फॉर अ बिगर अमाउंट टू गेट कलेक्टेड एंड देन वांट्स टू इन्वेस्ट. बट at the time of calculation of YTM, so when a client comes to me, I'll say the coupon rate is 12%, and I will not say the YTM is 10%. I will say the YTM is 10.7, because he can reinvest. If I go with this particular first step reinvestment only, so for the calculation purpose, I will tell the client that your yield to maturity is 10.7%. So whenever we
Okay.
talk about bonds, we always talk about yield to maturity.
Okay.
Coupon rate is something which will come to your account. As we saw, this 10,000 will come to our account, but at the time of purchase, 20,000 we have already given.
So it means that coupon rate and interest rate are different, right?
Coupon rate and interest rate are same.
Same.
Interest rate is called coupon rate because in previous time, when these bonds were distributed in physical format,
You told this, yeah.
coupons were so let us make a virtual coupon over here for the sake of understanding of others. Is not going. Okay, this is one, and let's say these are. So these, like what you are saying, outlines. So this is like coupon number 1. This is coupon number 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. Right? So in olden days, what happens is this was your bond. Previous days when the physical format of the bond was issued. So this was original coupon, right? And this was being sold to the client. So what happens is if somebody has bought this particular particular bond, he has these coupons attached to it. So he can simply tear off one coupon out of these 15 as of now available. He simply tears off one coupon, goes to the bank, present this coupon to the bank, and he gets interest out of it. Got it? Now what happens is that your bond gets credited to your demat account and interest comes directly to. Guys, I'm so sorry. Just give me 2 minutes. My niece has come. I mean, sorry, my nephew has come. He wants to show your face. बेटा सब पढ़ाई कर रहे हैं ना, पढ़ाई करने दो, चलो बाय बोलो.
Hello.
चलो
Hello.
जाओ पढ़ाई करने दो, चलो दरवाजा बंद करो, ठीक है? So sorry. So this coupon was tiered off, physical coupon. So that's why interest rate till date is called coupon. This coupon, one single unit was tiered off at the time of IP, which is interest payment date. It was tiered off. It was presented in the bank that I am holder of this particular bond. Give me the interest part. So bank gives you interest on this particular coupon while presenting this. Now what happens is now this doesn't come. First of all, this physical format doesn't come. What you get is you get a demat account bond. Bond comes into your demat account directly, and whichever bank account is attached to your demat account, your bank account gets credited with the amount of interest on the date of IP, which is interest payment date. So that's why interest rate till date is called coupon rate. Both are same thing, because it has a little history attached to it in the form of coupon. That's why it is till date called as a coupon rate. Okay, clear?
Yeah.
Great. Let's go to PPT in that case. So coupon rate we understood, yield to maturity we understood. So another thing which is mentioned is date of issue. On which date it has been issued. It could be March 2020. It could be yesterday only government has issued 10 years government securities. for which they have capped rate of 7.16%. I'm sure nobody has read from these 6-7 people who are over here, not even the news, right? So government issues fortnightly government securities for 10 years, right? So yesterday only government has issued 10 years securities, GSEC. For that, the yield they have kept as 7.16 yield, not coupon, yield. Okay, you can read that news. That will help you. If I have that handy, I will share it with you. Got it? RBI has issued that. Date of maturity, at on which date this particular bond will mature. That means on the date of maturity, in previous times, if you have the physical bond, you have to present that physical bond to the bank and you will get your principal back. If right now these days you are not having physical copies, so what you have to do is you simply have to wait, because on the date of maturity, very next day you will get principal back into your bank accounts. Bond will stay nullified, bond will be cancelled, all the terms attached to the bonds will be cancelled on the time of maturity. Got it? Then there's IP term and date. IP term and date. So first of all, IP means interest payment. Term and date means the term is defined whether the interest will be paid monthly, quarterly, half yearly, annually. That is term. What is it is defined, right? And date, on which date. For example, usually it is the date of issuance. I mean, it is always calculated from the date of issuance, right? So let's say I have issued bond on 31st March, right? So my this thing interest would be coming on 31st of March if my IP term is annually, right? If IP term is not annually, IP term is quarterly. So that means at the end of every quarter, my interest would be coming, right? Date usually is given for two conditions. One, either it is monthly or it is annually. So if it is monthly, though, it will be given as 28th of every month, 30th of every month, 31st of every month, or last day of every month. That is given. So usually on monthly basis, if the interest is coming, so it is 28. Why 28? Why not 29, 30, or 31? If interest is coming on monthly basis, the IP term is monthly, then why does your interest come on 28, not on 29, 30, or 31? 30 could be a well figure because every month has 30, right? So 30 can be taken. Why not 30?
सर क्योंकि अगर किसी की इंटरेस्ट पेमेंट डेट फरवरी में देना होगा तो फरवरी में तो 29 डेज होते हैं,
February
30
में
वाला तो
29 days भी लीप ईयर में होता है. You are right, but
हाँ
उसमें लीप ईयर
28
में होते
29
हैं.
होता है.
So practically also February has 28 days. So it is being
हाँ.
taken that every month has that date. Every month should have that date. So it could be any date between 1 to 28. Because for 3 years, February will not have any date beyond 28. So it would be any date between 1 to 28, not anything beyond 28, right? So that's why it is 28. For annual, if it is, then it will be taken, it will be given as on 30th, 31st of March annually, or only on 31st of March, right? And it is, if it is annually, if the interest payment term is annually, in that case, what happens is interest is paid on the date of issuance, the day on which the bond is issued. Now, there's a difference between the date of the issuance and difference between the date you have purchased it. Do you understand that? Let's take a simple example of this. We have taken the example of Louis Vuitton purse, right? Let's say Louis Vuitton purse was issued. That means it started from Paris on 1st April 2023, right? So date of issuance of that purse is 1st April 2023, and it says for 10 years. That means on 31st of March 2033, this purse maturity will be over. 10 years will be over, right? You have bought this purse on 1st of August 2023. So date of purchase of purse by you is 31st, oh sorry, 1st of August. But date of issue of the purse is 1st April. That means date of issue is different, date of purchase is different, right? Ananya ma'am bought that purse on 1st of August 2023, but Shireen ma'am bought the same purse from Ananya ma'am in 1st August 2025. But interest will be paid only on 1st April 2023, 2024, 2025, but 1st April because it is annually paid. Got my point? So there's a difference between date of issue and date of purchase. Purchase can be made anytime, but issuance is done by the issuer, and that is done only once, and then it keeps on changing hands. So issuer issues the bond in primary market, and we can keep on purchasing and selling in the secondary market. Is that clear?
यस सर. सर
Till now?
एक डाउट था.
हाँ.
सर जैसे आपने बोला कि जो इंटरेस्ट पेमेंट जो है या तो 31 मार्च को होता है या फिर इशुएंस डेट को होता है. तो जैसे 31 मार्च है, ये तो फाइनेंशियल ईयर के हिसाब से हो गया. तो अगर कोई
31
कैलेंडर ईयर.
हाँ 31 मार्च मैंने एग्जांपल लिया कि अगर मेरा बॉन्ड इशू 31 मार्च पे हुआ है तो
अच्छा.
I said usually the interest payment date is if it is annually, IP term is annual. In that case, the person, the holder of the bond gets interest on the date of issuance. So if the bond is issued on 1st April, you are liable to get interest on 1st April every year if it is annual, right? If the bond is issued, like as I said, yesterday the bond was issued, yesterday was 11th of August, correct? Government securities for 10 years has been issued on 11th of August. So every year, 11th of August, you will get interest every year.
अच्छा.
So
ठीक
date
है.
of issuance, it is usually date of issuance. Else, the financial year calendar you said, so if corporate who is issuing that bond wants that to be shell out on the financial year or on the, let's say, calendar year, they can set it off. For that example, let's understand key first example, let's take calendar year. So government has issued a bond 11th of August, right? Now they want to pay you on the calendar year. That means 1st January, every year they want to pay you. So from 11th of August till 1st January 2024 or till 31st December 2024, they will pay you interest for these 5-6 months. 8 and 4. So these 4-5 months, they will pay you interest. 5 months practical, they'll pay you interest on 1st January. Now in next year, 2025, 1st January, you'll get an interest of full year.
Okay.
Got it? If they
Yes,
want
sir.
to take it financial year, then they will give you on 1st April or 31st of March, right? From August to 31st of March, because they have issued in between. So for these 7 months or 8 months, they will give you interest till 31st of March. And then after 31st of March, it will be annually on 31st of March. Financial year to financial year. Got it? That can be done.
Yes, sir.
Usually it is on the day of issuance.
Okay.
Got it?
Yes, sir.
Because this cycle confuse everyone. So it is always on the day of issuance. If usually it is always on the day of issuance if it is being issued on a IP term of annual.
Okay,
Got it?
sir.
Okay.
Yes,
Now
sir.
thing is ki bonds is a way by which a corporate can get a loan or can raise a fund, right? They can raise a fund for longer term, 5 years, 10 years, 15 years, 8 years, 7 years, whatever time period they want. Does that mean that every corporate can raise a fund? Let's say today my company's name is Mudaksh Wealth Private Limited. I want to raise a fund. Will you invest in my company by not knowing me? Who am I? What is the financials of my company? Let's say my financials of my company is also good, but will you invest in my company? You will check for the credibility, correct? Credibility of my company's performance, credibility of the management of my company. So that is basically decided by whom? By your naked eyes and by your own wisdom, you cannot decide that. So there are agencies who give ratings to the company, and those ratings are called credit rating, right? So every company has a credit rating. On the basis of that, it is defined ki, okay, this company is good for investment or not. Primarily, any company which is having triple B minus and above rating is called as investment grade. That means any company which is having minimum triple B minus. Now, first of all, how these ratings are there, let me write it down for you guys. So, triple A is it visible?
Yes, sir.
Zoom कर देता हूँ थोड़ा सा. Better visible. Triple A दिख रहा है सबको?
Yes, sir.
Double A plus double A minus.
minus. Sir, but it also depends on the agency to agency, na?
Not really. Triple
Some of
B.
the just like Moody's जो है वो अलग rating है देती है, Credit Suisse अलग ऐसा.
So there are some 5-6 agencies which gives rating.
हाँ,
ICRA, ICRA,
ICRA या
CRISIL,
CRISIL,
Moody's,
Moody's, Credit Suisse.
Credit SUIS.
हाँ.
Then we have India rating.
ये लेटेस्ट है ना अभी इंडिया के लिए या what?
नहीं, India ratings है पहले से ही. India rating is
Okay.
so Moody's and Credit Suisse. These are basically they give ratings to usually countries and because they work on a global level. In India, we have this ICRA, CRISIL, and India ratings. We work on these three ratings majorly. One is CARE, yes, CARE, CARE. So ICRA,
Yeah.
CRISIL, India ratings and CARE. We have these four ratings which are primarily more you can say operational in India, and
S&P, S&P,
S&P again. S&P is a global rating. So
global rating.
हाँ, so S&P है ये global में जाएगा आपका.
Fitch also, sir. Fitch also is a global,
Fitch,
right?
SLP, हाँ, correct. These are global. So these are rating agencies. So India majorly we have these four: India rating, CARE, ICRA, and CRISIL. There are others. They have Moody's is also present. Credit Suisse is also present. ऐसा नहीं कि ये present नहीं है, but they don't rate easily to the companies. They have different criteria, and every company also doesn't get rated by them. Companies also don't go for rating. See, company को क्या चाहिए? Company को fund चाहिए. So company will also go to a rating agency which can be little lenient and can give them a little higher notch of rating so that they can raise fund easily. Now, as I said, rating is triple B minus. This is an investment grade. What does that mean is कि at least this rating is safe for investment. You can at least think of investing your money into it. Anything which is above triple B minus and above, I mean anything which is triple B minus and above, any company which is having rating above triple B minus, you can think of investment. Now this is credit rating. Credit rating simply is associated with your finance, majorly how company is doing financially. Is the company's business financially viable or not? Is the company's business as per the finance is stable or not, sustainable or not? Everything is being taken care into it, right? With this management, business, type of business, products, everything is calculated, taken care, economy is understood, accordingly ratings are given. If any company is having this triple B and minus, then only company can raise funds easily from market. First of all, that does not mean that any company which is having double B and below rating cannot raise. That does not mean. They can also raise, and they also raise, but again, higher the risk, higher the reward. So double B and below ratings means they have higher probability of default, right? If they have higher probability of default, that means they will be giving you higher interest rate. Got it? Banks, when you go for the lending, what banks look into is this rating, that is it triple B minus or not. So triple B minus means that this particular company is at least sustainable. Company is doing legitimate business. Company can be trusted. Company might be struggling, that's okay, but company can be trusted for investments. So then banks start their process for assessment of loans. Below this rating, bank does not assess, or bank usually avoid to give any loans to any company which is having triple B minus and below rating. Bank usually avoids. Bank gives if they have a good collateral which is covering more than 100%, then definitely bank can overlook rating also. New companies which does not have balance sheet of more than 2 years, they usually don't have ratings, so they also get loans, but again they have different criteria. But majorly 70 to 80%, or in fact more than 80%, bank always look for this particular rating. So in the same way, what we as an investor are doing is we are giving loans to the company, but this is an investment, so definitely the security, the collateral is not there with us. So in that case, rating becomes more important for us, correct? So if we are getting AAA, that means lower risk. AAA rated company means it is having a least probability of default, that it is having the least chance of getting default. So our risk is getting minimized over here with respect to rating. So definitely higher the risk, higher the reward means lower the risk, lower the reward. So any company who has issued bond having AAA rating definitely will give you less interest or coupon rate. But with compared to the bank's FD, it will always be higher. Otherwise, investor will not be interested. Got it? Everyone clear with this? Elster, Harsh, Anirudh, Ayan.
Yes, sir. Yes, sir.
Okay, Elster and Ayan not interested. Chalo.
No, sir, I'm there. It's just that there's a lot of background noise.
From my side,
No, sir, at home.
at home. No, but you seems to be in a very peaceful environment. Okay. Anyway, so let's see the terminologies, how it looks like on. If you go on to India bonds, there you will find it NSC. There you will find it. So this is symbol. What is the name of the company? NTPC. This is series. This is bond type, usually regular. Majorly is coupon rate. So coupon rate is 8.49. Face value is 12.50. It is 12.50 rupees, right? 1000, 1000, 1000, 5000. These are the face values of the bonds. Last traded. So 13.25. Face value is 12.50. That means 0.75 is the premium over here. It is a change like in stocks. 100 रुपए का बाय किया, आज 101 रुपए का हो गया, तो कितना उसके ऊपर चेंज आया from yesterday. This is volume, not necessary for us. Value in lakhs, not necessary for us. Rating. So CRISIL rating. In India, majorly we look for CRISIL and CARE rating. CRISIL and CARE, these two parties are more, you can say, prominent in this particular sector. So CRISIL rating and CARE rating, you will majorly find wherever you are seeing CRISIL rating, you can say that this is a rating where you can rely on that particular rating. कि ये rating दिया है तो at least ये अगर AAA नहीं भी है तो ये at least ये AAA के पास में है. This much at least you can rely. Got it? Others, definitely there is a little, you can say, ambiguity, but again, CRISIL is the most trustworthy amongst all. Then this is date of maturity, 25 March 2025, 21st December 2030, 3rd November 28, 27 September 23, like that. So on these dates, these will be maturing. This is how your bond looks like. Now we'll just go through the definitions. Face value is the value of the bond, is the price that the issuer pays at the time of maturity, also referred to as par value. Got it? Coupon rate we've discussed. A rate is the yield paid by a fixed income security, which is annual coupon payments divided by the bond's face value or par value. Okay? Yield to maturity is the percentage rate of return of a bond, assuming that the investor holds the asset until its maturity. Now, yield में एक छोटा सा change क्या हो सकता है? Yield में एक छोटा सा change ये हो सकता है कि maturity, date of maturity is for 10 years. But instead of keeping it for 10 years, you have kept it for only 2 years, right? 1,20,000, 1,20,000. You got how much? 2,40,000, right? You paid 20,000 premium. So you actually got how much? 2,20,000, right? Net you got 2,20,000 in 2 years. So in 1 year you got how much? 1,10,000. 1,10,000 divided by 10 lakhs. How much? 11%. So yield is 11%. If you have kept it for 1 year, in 1 year you got net effective 1 lakh. 1,20,000 you got as interest, 20,000 you paid as premium. So your net effective was 1 lakh. So 1 lakh divided by 10 lakh is 10%. That means if you kept the same bond for 1 year, you got 10% as a yield. If you kept that bond for 2 years, you get 11% as a yield. Got it? If you keep this bond for 3 years, you will be getting how much? 3,40,000 divided by 3, which is per year. Let's do that calculation for you guys. So 1,20,000 per year you are getting it. For 3 years, you will be getting how much? 3,60,000. Got it?
Yes, sir.
You will be shelling out 20,000 rupees as premium. Net effective would be
3,40,000.
this minus this which is 3,40,000. This is for 3 years. So if you divide this by 3, you get it per year. This is per year income you'll be getting 1,13,333. Now the face value of the bond is 10 lakhs,
10 lakhs.
right? So net effective is this divided by 10 lakhs, which is 11.33%. So if you're keeping it for 3 years, you are getting 11.33% as a yield. That means the more time period you are keeping it, more yield you are getting it. That for the lesser time period you are keeping it, you are getting less yield. Got it? So that's why it is written it provided that you keep that asset till maturity. If you hold till maturity, then whatever yield at the time of beginning is being assured to you, you will get that yield. But if you switch in between, then yield will change. One thing. Second thing, yield और कैसे change हो जाएगा?
जब अपने रीइन्वेस्ट नहीं करेंगे.
नहीं, रीइन्वेस्ट को कंसिडर कर रहे हैं अपन कि थ्योरेटिकली वो हो रहा है. और कैसे यील्ड चेंज हो सकता है? आपका यील्ड इफेक्टिव चेंज क्यों हो रहा है?
जब डिस्काउंट पे मिले तो.
डिस्काउंट पे मिले. और यील्ड कैसे चेंज होगा? आपको इनिशियली जो मिल गया, जब आपने इनिशियली बाय कर लिया, उसके बाद लेट्स से आपको यील्ड फिक्स हो गया कि 11.5% का यील्ड मिलेगा. आपने डिस्काउंट पे लिया है, प्रीमियम पे लिया, व्हाटएवर इट इज. आफ्टर 3 years यू सोल्ड इट. तो पहला तो ये हो गया कि आपने टाइम पीरियड मैच्योरिटी तक नहीं रखा और यील्ड चेंज हो गया. Second, what is the other way in which yield will change? Anirudh, Ayan, any idea about this?
No.
Harsh?
So maybe the time for which like the interest is paid. So it could be like a half yearly or a quarterly or a.
That is one thing.
I'm assuming.
That is one thing. Ki changing of time period of holding of the investment changes the yield. What is the other thing which changes the yield? It is the premium or discount. So as I gave an example, ki when this Louis Vuitton purse, which Ananya ma'am bought it at 10 lakh 20,000, when Shreen ma'am bought it from her at 10 lakh 50,000, that means she actually earned 30,000 in that particular thing. Initially, she only paid 20,000 as a premium, but when she sold on higher premium. That means she earned 30,000 more. So let's say after 2 years, let me take it on a fresh this thing. So Ananya ma'am bought it at 10 lakh face value, right? Premium she paid was 20,000. So net is 10 lakh 20,000. Okay. No, 10 lakh 20,000. Okay.
Yeah.
Now she kept it for 2 years. So in 2 years, interest income she'll be getting how much? 2,40,000. Right?
12%.
With me or
Yeah.
not? With me or not?
Yes,
Yeah.
sir.
2,40,000 she got an interest income, right? She sold at 10,50,000, right? In total, how much she got? First of all, 10,50,000. So let's say this minus this. This is her capital gain, 30,000.
Yeah.
Plus she got 2,40,000. Got it?
Yes,
So how
sir.
much she get? 2,70,000.
Yeah.
Okay. Now 2,70,000 divided by 10 lakh. This divided by 2,70,000 divided by 2. First of all, we have to do equals
3.
this
Achha,
divided
2 years.
by,
Yeah.
divided by 2. So per year she is getting 1,35,000, right? On an average. So her yield would be 13.5%.
5%, right.
And what was the coupon rate?
Coupon rate was 12.
12%.
12.
She paid an premium of 20,000. Still her yield went up. Why? Because at the time of selling, she got more premium.
30,000 more
If
premium.
the demand of that particular bond has increased, then definitely she'll earn more money into it.
Okay. So it's premium on premium, right?
It's premium on premium.
Yeah.
Correct. Now this 30,000, this is called capital gain, right? And this 2,40,000 is called interest income. For the perspective of tax calculation, these two things will be considered separately. This capital gain will come into long term because it has been held for more than 1 year. In debt side, it can be more than 3 years. So depending, let's say we consider as it is as a short term, because for debt investment, it is more than 3 years,
3 years, yeah.
will be considered
As
as
long-term gain.
long term capital gain, LTCG. So this is short
Sir,
term
I
because
have
we
a
have kept it for,
question.
sorry, yeah, please tell me.
So in the interest calculation, like you mentioned interest income there.
Hmm.
So that'll only be calculated based off the face value, right? Which is 10
Correct.
lakhs.
Huh.
Like, well, not the, it doesn't include the premium amount, right?
No, not at all.
Okay.
Yeah. So this will be long-term capital gain. Right now here it is for 2 years. So here it is short-term capital gain, short-term capital gain. So it will be taxed as per the norms of short-term capital gain. And this will be taken as your business income, or will be charged, or taxed, not charged, will be taxed as per nominal, as per nominal rate. And nominal rate is your slab. So let's say if you're following, government has a tax slab. Do you know that government has a tax slab till 7 lakhs, 7.5 lakhs? They don't have any tax for as per new regime. Have you heard this?
Yes.
Everyone,
Yes, sir.
I want to hear yes from everyone. Does everyone knows about the tax slabs?
Yes, sir.
Yes, sir.
Harsh,
Yes, sir.
do you know about the tax slabs?
No, sir.
So that means right now you are not interested in the class also. You've heard the class completely?
सर बीच बीच में सर मैंने बुला लिया था तो मैं सुन रहा था तो आपने तुरंत बोला तो तब ध्यान.
Got it. Ayan, do you know about the tax slabs?
Yes, sir.
Anirudh?
Yes, sir.
Okay. So Harsh, your father is a businessman or he is a salaried person?
Sir is retired. He used to
He's,
work in a bank before.
he used to work in a bank. Wonderful. Then so he can easily explain you what exactly tax slab is. So I'll just give you a brief. You get a detail from him. So brief is कि whenever we earn income, let's say my yearly income is 10 lakh rupees, right? So government does not charge a flat that you have earned 10 lakh rupees, give us 30%. That means 3 lakh rupees as a tax, and rest 7 lakh you keep. Government doesn't charge this way. What government says, we will give you certain advantage. That means they divide my income in slabs, right? So they say that from 0 to, I'm taking the old slab, I'm not taking the new slab. New slab, you just inquire it from your father. You'll understand better. 0 to 2.5 lakhs, if you're earning, you will have to pay 0% tax. From 2.5 lakhs to 5 lakhs, if you're earning, you will have to pay 10% as a tax. 10% of this amount, right? Harsh, with me?
Yes, sir.
Great. If you're earning from 5 to 7.5 lakhs, you will have to pay 15% of interest. See, these figures have changed completely. For the sake of explaining, I'm explaining it to you, right? Tomorrow don't quote me कि सर आपने 7.5 लाख बोला था, slab तो 10 लाख का. Slab has changed. I'm just giving you an example how these things are calculated. From 7.5 lakhs to 10 lakhs, it is 20%, and 10 lakhs and above, it is 30%. So if I am earning 10 lakh rupees as an income, so what will be my tax? In first bracket, it will be 0. In second bracket, it is how much money? 2.5 lakhs. On 2.5 lakhs, if I have to give 10% of interest or 10% of tax, how much tax? It is 25,000. Okay. Right?
Yes, sir.
Harsh, with me?
Yes, sir.
Great. And here again 2.5 lakhs, and how much amount I have to pay as a tax? 15% of 2,50,000, which is 37,500. Here 20% of 2.5 lakhs, which is 50,000. And since I have till 10 lakhs, so above 10 lakhs, I don't have anything. That means here I don't fall anything because I have not earned anything. So my total tax would be sum of all the above. 1,12,500. This will be my total tax. If I come into the slab of here, if somebody asks me in which slab do you fall, I will say I fall in 20% slab. Falling in 20% slab does not mean that I have to pay flat 20% tax, because flat 20% tax of 10 lakh is how much? 2 lakh rupees. But effectively I'm paying how much? 1,12,500, because government divides my income in slabs and gives me rebate. Now here, let's say this 2,70,000 or 2,40,000 of interest I have earned. So this will come over here. So my income would be 10 lakh to 12 lakh 40,000, right? Because I have earned 2,40,000 as interest income, and this interest income will be charged as per my bracket. So here I am having how much? 2,40,000, and I am paying tax in this particular 2,40,000 at the rate of 30%. So 72,000 rupees of tax I will be paying on this 2,40,000 income. Got it? Understood?
Yes, sir.
Anirudh, Ayan left. Okay. Everyone else understood how this slabs? These rates
Yes, sir.
actually are little different. This is, you can say, a little bit of homework for you, that you have to find out what are the rates, because there are two regimes now, old and new. So understand that regime and accordingly tell me what exactly it is. In next class, I'll ask everyone about the slab rate. Okay? Fair enough?
Okay, sir. Yes, sir.
Great. So here in this is the scenario when demand of your bond which you're holding goes up, you get actually higher premium if you sell it. If you keep this still holding till maturity, definitely you will not get this particular 20,000 back. So this is the second scenario where your yield to maturity can increase, right? Now, why does this premium increase? Any idea?
So
Any
due to
idea why does
more,
Is there
Huh.
due to the more demand,
More demand? Why the demand will increase?
because
if
the
there is price changes of the bond?
So why the price of the bond changes? That is the question.
because the company is doing well or giving good returns.
No, company will not change anything. Once company has issued
Okay,
that bond, company will
bond,
not
right.
change anything
Sorry,
after that.
sorry, yeah.
For that bond, company will not change anything. If company is giving you 6% of return, company will keep on giving you 6% of return only. But why does this demand increase?
Maybe because of how popular the bond is, like if it's been traded or something.
No.
So what if like
Okay.
I buy the bond?
I'll request to switch on the cameras. At least I can feel that I'm talking to people, not the robots. Good. सूरज, अनिरुद्ध, सूरज के तो
Yes,
रूम
sir.
के पीछे कोई ऐसा है जो पीछे भग रहा है इधर से उधर, तो सूरज बार बार कैमरा ऑफ कर रहा है.
What, sir?
तुम्हारे रूम में कोई ऐसा है तुम्हारे पीछे भाग रहा है इधर से उधर, लेफ्ट राइट?
मेरे रूम में
हाँ, तो स्विच ऑन करो
नहीं.
कैमरा फिर. अनिरुद्ध, हर्ष, एल्स्टेयर, switch on your cameras, please. Yes, ma'am. You were saying, Ananya, ma'am, you were saying something.
Sir, maybe due to the fall in interest rate of the bond.
One of the reason and major
Sir,
one.
instead of selling the bonds in primary market, what if I buy it and sell it to someone else in secondary market? Like
That
from a
is,
different.
so that is a secondary. But again, bonds are something which are more or less very stable. They usually don't change so much. Like stocks. Stocks is something ki today you have bought it, tomorrow it can go 10% up. For 2 days it may stay there, and again after 2 days it can come down 15%. Bonds are not like that. If bond has been issued, usually bond stays for years at the same rate. It doesn't change much. It takes years for a bond to change. Suraj gave a good answer for that. That is interest rate. Interest rate has a great implication because what actually we are earning in bonds, that is interest rate. That means
Yeah.
there's only one factor which is impacting the price of the bond. That is interest rate. If interest rates goes up and down, that will change the demand and supply, and that can change the scenario completely. Now, when we started the topic of bond, we said that government bonds are most safe, right?
Yeah.
That means if somebody has invested in the government bonds, the person or the entity whosoever is invested should not go on default and should not be on the losses, right? Is that right?
Yeah.
In that case, tell me what happened with the SVB bank if you have heard and read about it.
Yeah.
Yeah, nahi, kya?
I guess sir, they provided मतलब like उन्होंने short term का पैसा long term में दे दिया था what I have heard मतलब उतना पड़ा नहीं था for that तो liquidity उनके पास वो
Sir, there
maintain
was
नहीं कर पाए थे वो लोग
asset liability mismanagement.
But why does that happen? What was the case?
So
I
क्योंकि
think last I heard. Okay, go on, Shane.
Sorry?
सर क्योंकि सर क्योंकि जो फेडरल वहाँ के जो बैंकिंग सिस्टम थे सेंट्रल बैंकिंग सिस्टम उन्होंने बहुत ज्यादा एग्रेसिव अप्रोच कर लिए थे और इन्फ्लेशन के उसमें मतलब इन्फ्लेशन के चक्कर में उन्होंने सारे इंटरेस्ट रेट और टैक्सेस जो थे वो एकदम से हाई कर दिए थे जिसकी वजह से उनकी जो बॉन्ड वैल्यू थी वो कम हो गई थी ऑल्दो उन्होंने इन्वेस्ट मतलब लॉन्ग टर्म हिसाब से किया था बट क्योंकि गवर्नमेंट की साइड से एग्रेसिव वो अप्रोच था इन्फ्लेशन को टैकल करने के लिए तो उनके बॉन्ड वैल्यू पे वो इफेक्ट किया था और फिर वो एकदम से नीचे चली गई तो बाय द टाइम कि वो अपने बॉन्ड्स को ऐसे निकाल के एसेट लाइबिलिटी को मैनेज कर सके या कुछ कर सके तब तक वो मतलब बैंक जा चुका था
To great extent, yes. So basically, in nutshell, मैं आपको बताता हूँ क्या इसमें क्या हुआ था. कोविड में इन्फ्लेशन काफी हाई चला गया, राइट? कोविड के बाद इन्फ्लेशन हाई क्यों चला गया? बिकॉज इंटरेस्ट रेट्स वर डाउन. इंटरेस्ट रेट्स वर डाउन, सो उससे सरप्लस मनी और डिस्पोजल मनी इन द हैंड्स ऑफ इन्वेस्टर्स वाज टू मच. अगर मेरा होम लोन एट द रेट ऑफ 10% एंड ऑल ऑफ सडन इंटरेस्ट रेट्स कम होके 10 से 4 पे आ गए, if I was giving or shelling out 60,000 as my interest and all of a sudden interest rates have come down, so that means my interest outgo has reduced from 60,000 to let's say even 30,000 or let's say reduced to 40,000. That means 20 to 30,000 I'm saving more. So definitely I will start demanding more products in the market. And if I'm demanding more products in the market, right now supply is not that much. Supply is limited. Supply is depending upon the previous demand. Previous demand was for 100 units. 100 units are being made in the market. But all of a sudden, demand has increased from 100 units to 150, 160, 140. That means 40, 50, 60 units are being demanded more. Available is 100. All of a sudden, the production cannot be increased. So when units are available 100, demand is for 140, 150. That means it will automatically increase the price.
yeah
Increasing the price simply means increasing the inflation. That is only in simple terms inflation, that the commodity price has gone up, right? So price gone up. Now to reduce that inflation, what all government throughout the world did was they started increasing the interest rate slowly and gradually, right? So when they're increasing the interest rate, what actually they are doing is they are trying to cut off the surplus liquidity. So right now, 30,000 all of a sudden were extra for me, or 20,000 were extra for me. Again, my interest rates are going high. So this 20,000 is reducing. Now, out of this 20,000, which was left extra, again, I'm paying some 5,000 rupees in the interest. So I'm left with only 15,000. So I will start dropping down my demands.
demand
Next
yeah
time it could be 10,000. Next time it could be again left only 5,000, then 2,000, 3,000. Slowly and gradually, interest rates were rising. So the surplus money, the disposable money, which was at the hands of the investors, was reducing slowly and gradually. But nobody knew that till when these interest rates has to be risen. SVB Bank did a wrong thing was they were not able to calculate. First thing, the wrong is they did not calculated well that how long they can these rates can keep on increasing. First thing. Second thing, they have the money of startups majorly, startups or venture capitalists. So their major source of money was of startups or venture capitalist money, which they have kept with them. Third mistake which they did was that 90% of the funds they invested into sovereign bonds for 10 years.
Oh, long term.
So the first mistake which they did was they did not calculate it that how long this interest rate will increase. They invested into it, and after 2 years of their investment, though their investment was not wrong, they were still earning money in that investment. What went wrong is the rise of the interest rate. So interest rates kept on rising. So they invested, let's say in 2020, in 2022, what happens is that when they invested and in 2022, at that time, for almost 2 years, interest rates have gone beyond 2% high. That means 200 basis point up, which they were not able to match. And Shireen ma'am rightly mentioned that since people are getting 2% higher interest rate in other bonds, then why will they buy these bonds? So practically, their bonds become illiquid. Nobody was ready to buy those bonds. So their bonds were now being sold at discount. Instead of 10 lakh face value, those bonds was being sold at 9 lakh 80,000, 9 lakh 50,000. Interest they were getting as it is. If they would have held till maturity, they would not have gone into losses. But why they went into losses, why they booked the losses was because of their third mistake, where they make 90% of their investment into these bonds, asset liability management, which you call it. So they did not calculate it ki all of a sudden if the demand of the funds come in, from where will they match this liability? Because the funds are liability for the bank. In 2020 or 23, late 2022 or early 2023, what happens is these startups, they found opportunity in the markets and they start asking money back. Give us our money so that we can go and produce and earn money more. Give us our money back. And they didn't have money to pay because 90% of funds were stuck in government bonds. Government bond is the highest security. Bonds itself did not defaulted. Government itself did not defaulted. Only their calculation defaulted. Now, let's say they bought the bonds at 100 rupees. Now the value of those bonds was left only 87 rupees. That was because of that they got into default. The principal amount itself reduced. And this happened because of interest rate. So interest rate has a higher, you can say, hand in playing for the bonds demand and supply. Got it?
Yes, sir.
Confused or clear?
Clear, sir, clear.
Clear, sir.
Great. So basically, bonds are majorly impacted by interest rates, and we are fortunate enough to see the volatility, fluctuations, and changes in the bonds for last 3 years. Now, for last 3 years, bond market has been changing very rapidly. If you just go and see before 2020 for like 10 years and 20 years, you will see that there is no change at all. Almost no change, almost flat. Rates have been constant. Everything has been constant. And there has been no change into all these markets. But for last 3 years, because almost every quarter rates were increasing from pre-COVID to now, we have changed our rates to almost 4%. We have gone higher by almost 4%. Right? Now we will start reducing also. So once we start reducing, again, the demand of the bonds, which are right now giving you 10%, which are giving you higher yield, the demand will increase. Because once the interest rate will start coming down, definitely there will be no parallel product. Right now, who is competing with the bonds? Fixed deposits. Fixed deposits, you are getting at the rate of 7%. Once interest rate come down, what is the first thing which gets down quickly is fixed deposits, right? Your loan rates will not come down, but fixed deposit rates will come down. So fixed deposit rates will come down, bonds rate will not change, they will be there. So definitely the demand of these bonds, which are AAA rated and they are giving you 7%, 8% yield, the demand will go higher. If demand will go higher, then definitely you will have to pay higher premium, right? Correct? So this way it changes, hands changes. So this is how yield to maturity can be affected. Date of issue, again, on which date it has been issued. Date of maturity, the date on which the bonds get matured and you get your principal amount, which was your original investment back. Principal amount is your face value. Got it?
Yes, sir.
IP term date, interest payment, that is the frequency on which term is that is the frequency at which the interest will be paid, and date is again the date. Credit rating, we have discussed that bond rating indicates its credit quality, how the credit of that particular corporate who is issuing the bond is, whether the company is strong in the financials or not. Rating takes into consideration a bond issuer's financial strength or its ability to pay a bond's principal interest in timely fashion. This is being calculated, right? Higher the rating, better it is. Triple A, double A plus, again we saw that, and triple B minus we always consider as a investment grade. Okay, these are examples, or these are basically Brickworks is and BWR. Brickworks is also another agency which is very much active in India. So India Ratings and Research, it gives ratings. So it is as IND AAA, IND double A, IND triple B. CRISIL gives rating, then CRISIL triple A, CRISIL double A, BWR, Brickwork ratings, CARE writes CARE, ICRA writes ICRA, right? So if it is triple A, what does that mean is lowest risk of turning into defaulter. If it is double A, it is very low credit risk. A, low risk. B is, or triple B is moderate credit risk. Double B is moderate risk of default. It goes B and C and D, then it is high risk of default. C is very high risk of default. Instrumental are already in default. जहाँ पे D rating होगी वहां पे definitely company पहले से ही default में होने के chances हैं. Is that clear?
Yes.
Getting bored?
No, sir. We're understanding.
No, you are understanding. I'm asking everyone else. Getting bored or what? Harsh,
No, sir.
what no? I only
I'm
said
not getting.
you're not getting anything.
No, not getting bored, sir.
But I am not saying anything interesting. I am not cracking a joke. You should be bored.
नहीं सर समझ रहा है अच्छा लग रहा है.
Yeah, Nirud, tell me.
Sir, I have a doubt, sir. So
Ah.
suppose I want to take a loan from a bank.
Hmm.
Should I go for a fixed rate of interest or a floating rate of interest? Like, which is better?
See, that's a good question. Depends upon what scenario you are standing at. So let's say we'll take two scenarios. We are fortunate enough that we have both the scenarios live right now. You are standing in 2020, March,
Yes,
or
sir.
let's say May, June, or August for that matter, when interest rates fell down, when government pushes down the interest rate, right, by 2 to 3% drastically. So at that time, interest rates are low. So what you have to do is you have to keep your interest rate at fixed. The simple reason is because understanding the economy, we understand that if economy has to flourish, economy has to go, or in that scenario, in our example, inflation has to be controlled, then definitely interest rate will rise from here. So if you
Yes, sir.
understand the basics of economy and you know that interest rate will rise from here, in that case, you have to take fixed rate loans because that will help you keep in check. But right now, if you're taking loan, right now, that means standing into August 2023, from here you understand if economy has to grow, definitely it will be taken care by the corporates will grow because corporates will be doing a lot of business, corporates will be doing a lot of infrastructure development, everything will be taken care. Corporates can only expand when they get loans or funds at cheaper rate. Guys, just give me one moment, just a moment. Sorry guys, so basically right now if India has to grow, or any country for that matter has to grow, the growth will be taken care by the corporates, right? So if they have to grow, they need more funds to grow. Funds will only be accessible if they have lower interest rate. That means for the growth of the economy, interest rates have to come down, right? So that is sure that interest rates cannot sustain at this level, because at this level what is happening is that disposable income and surplus funds are not with the investor. In that case, interest rates has to come down. So here you have to take floating rates, because if you take floating rate, you have taken loan at this particular rate, which is coming at 9%, 10%. After a year, this interest rate will be down and your rate will be adjusted automatically, because every 3 months or 6 months or 1 year, depending upon the type of the loan, interest rates are readjusted. So your interest rate will keep coming down. So depending upon the scenario only, you have to decide that you have to take a fixed interest rate or the floating interest rate. Usually,
Yes,
you are,
yes.
yeah, usually
No,
you are given the floating interest rate.
okay.
Because if
Got it.
in case if you go in our first scenario, when during the COVID periods, that is 2020 August, if you're going for a fixed interest rate, banks are more informed, so definitely they will charge you little higher in case of fixed interest rate. They will not give you 8% as it is, because banks are there to make business out of your loans. Got it?
Yes, sir.
Because they are ensuring you to keep the same interest rate. Now understand this scenario. In 2020, let's say the loan rate was 5.5%, right? And in 2023, the loan rate is somewhere around 10%, almost doubled. From 6 to 10, it has come down. 3 to 4%, it has risen actually, right? So 4% is risen right now, and you have taken the loan at 6%, and right now it is 10%. If bank is giving you at 6%, from 6 to 7, it actually went in 6 months only, right? So bank start making losses from that particular moment, the moment it start rising, and it cannot sustain, because bank also doesn't know whether it will go and stop at 10% or 20% or 15% or 12%. Bank also doesn't know. So bank cannot take that risk. So what bank will do, as per the assessment of the bank will assess, okay, as per our assessment, this interest rate should go till 10%. They will charge you somewhere around 8%. So till the time you go, interest rate goes to 8%, bank is still making money. At 8%, bank will come on break even. And after 8%, when it goes to 10%, bank is making loss. But if you have gone through the EMI calculator, just go through the EMI calculator. What happens is, during your initial EMIs, you actually pay higher interest. That means if you are paying an EMI of 100 rupees, 60 rupees are going towards interest, 40 rupees is going towards principal, like that. So higher amount of interest goes in your initial EMIs. So bank makes money over there also. So if you have taken loan and interest rates are stable or static, and you are just switching your loan from one bank to another after every year or after every second year, you are actually losing a lot, because in your initial years you are paying lot of interest in your EMIs rather than your principal.
Sir, suppose I have a scenario. For
हाँ
example, I took a loan for like around 10 years,
हाँ
and I took it for the floating rate of interest. Okay. So
sorry
for
हाँ
the first 5 years,
हम्म
the rate of interest came down to from 10 to 5%.
हम्म
Now for the last 5 years, the interest rose from 5 to 12%.
हम्म
Like in the end, like it was a loss for me, right? Because I got it from 10%, and in the end it rose to 12%.
हम्म
So like in the end, it was not good for me as a client, I would say. Or was
it
it?
in this case it is actually not good for you. The reason is, for first 5 years when you got it at the 10% and it was at the 10%, right? You said na, ki it was at 10% and next 5 years it gone to 12%, right?
Yes, sir.
So first 5 years you have actually paid at the rate of 10%, but the thing is you were paying higher interest. I mean, the more amount of your EMI was going towards your interest part, right?
Yes, sir.
So your principal also reduced less in first 5 years. The coming next 5 years, practically you have higher principal outstanding compared to your EMIs you have paid, and now the interest rates have also gone high, 12%. So practically you are actually ending up paying higher interest on your loans. If you calculate it point by point, you might end up paying higher than 12% also. That is the
So, sir,
fact.
in this kind of scenario, what could I have done like to get a greater profit for me?
See, that is a different calculation understanding altogether. So the first calculation always says that whenever your EMI is being settled, let's say your EMI amount is coming as 100 rupees, you should always pay a little higher amount of EMI, which is called voluntary higher amount, So instead of 100 rupees, pay 110 or 120 rupees. Now what happens is in EMI, let's say it is calculated 100. So 60 rupees, just for example, 60 rupees is going towards interest. 40 rupees is going towards your principal. In next month EMI, 59 rupees will go to interest, 41 rupees will go towards your principal, right? So your principal amount will keep on increasing. The outgo from your EMI to principal amount will be keep on increasing, and interest will keep on decreasing. But if you increase your EMI from 100 to 120, so what happens is your interest outgo will be fixed, which is 60 rupees. That will go 60 only, 60, 59 as it was going. But now you are paying higher amount towards principal. So initially for the first EMI, your principal went was 40 plus 20, which is 60 rupees. Now when your second EMI will be calculated, because your interest is calculated on the principal outstanding. If your principal outstanding is reduced, let's do it on the Excel sheet, and that will help you more. Let's say you took a loan of 1000 rupees, right? Your EMI is 100. Out of this EMI, your interest is 60. Your principal is 40. That means you have taken loan of 1000 rupees. After first month, what is your principal left, which you have to pay? 1000 minus 40, right?
Yes, sir.
With me? Okay. Next month you paid EMI of 100 rupees. From here we said that 59 rupees goes to interest, 41 goes to principal, right? So your principal net left is this minus this. Now interest will be calculated on this principal. Interest never gets calculated on initial principal. Whatever principal is left on this, interest is calculated. Let's say here I paid 20 rupees extra. This is the first method I'm talking about. So here my principal outstanding would be this minus this also. 940.
Yes, sir.
It automatically reduce my principal to 899. Here again, if I reduce 20 rupees more, 879. Now, if we do calculation actually, so let's say we multiply it by, at the rate of 10%, we are taking it, right?
Yes, sir.
Multiplied by 0.1, 10% divided by 12, because per month interest, 8 rupees 33 paisa per month. So let's put it 8 rupees 33 paisa we are paying interest onto it. This is per month interest, correct? Because if we calculate per annum interest, it would be this multiplied by 0.1, which is this 100 divide this is equals to this divided by 12. This is this one. So per month my interest is 8.33. थोड़ा सा इसको भी फैक्चुअल फिगर पे लेके आते हैं. Let's say my EMI is somewhere around 15 rupees, correct? So this is equals to how much? 15 minus this much.
Yes, sir.
With me, everyone?
Yes,
Guys,
sir.
everyone with me on this calculation?
Yes, sir.
Great. So here I am paying 10 rupees extra. So total EMI I am paying is 25. Because 10 rupees I am paying extra. And my EMI is 15 rupees. Right? Okay.
So can you show me once again how you reach these figures?
Okay. So 1000 rupees is my loan.
Yes,
Okay.
sir.
And I am paying it, I am having this loan at the rate of 10% per annum.
Yes, sir. So that comes out to an interest rate of
Per month,
8.3%.
my interest is 8.33. So I'm assuming that my EMI is 15 rupees. Out of this 15 rupees, my principal or my interest is 8.33. So my principal amount goes to is 6.77.
Right. So the 15 was an arbitrary amount, right?
Arbitrary amount, correct.
Like for now.
I have not done an EMI calculator. I'm just taking an arbitrary amount. You want me to do a
Okay,
real
so now I
EMI?
understood.
You want me to use a real EMI calculator? I can do that.
So I'm fine with either. I just wanted to know how you got the 15 rupees.
15
That's
is
about the
assumption.
confusion.
15 is an assumption
Okay, sir.
that EMI is 15 rupees. So if EMI is 15 rupees, out of that EMI, 8.33 is interest and 6.77 is your principal. What does this mean is that this 6.77 will go and get deposited in 1000 rupees outstanding, because this 1000 is now minus 1000, because we have to pay. So we have paid out of 1000, we have paid 6.67. Now, the first thing which Anirudh asked is how can we fight this, or how can we reduce this easily? So I said that I am paying 10 rupees extra as a principal in 10 rupees extra EMI, which is reducing my principal. So my principal will be reduced by not by 6.77, but by 16.77, 16.67, right? So my net principal outstanding is how much? 9.8, 983.33. Got it? Now my interest will be calculated over here is this, because interest is calculated on the principal outstanding. If my principal outstanding is reduced, so my interest part is also reduced. Interest rate has not reduced. Interest actual amount has reduced. So here my EMI is 15, but my interest goes down from 8.33 to 8.19, and remaining part is how much? That goes to principal, 6.81. Okay. And again, I am paying 10 rupees extra. And this goes on. So now my interest part is how much? 8.05 for third EMI. अनिरुद्ध ये समझ में आया?
Yes, sir. Yes, sir.
तो ऐसे हमारा इंटरेस्ट आउट को जो होगा वो कम होता जाएगा. अगर मैं यहां से 10 को हटाता जाऊं, 8.33 से मेरे को यहाँ पे कितना रहा है? 8.27, 8.278, राइट? फिर यहाँ पे 8.22. तो मेरा इंटरेस्ट का जो आउटगो है वो बहुत धीरे धीरे कम हो रहा है. लेकिन फर्स्ट केस में क्या हो रहा था? मैंने 10 रुपीज एक्स्ट्रा दे रहा था तो 8.19, 8.33 से सीधा 8.19 आ गया. जबकि यहाँ पे थर्ड इंटरेस्ट EMI देने के बाद भी वो 8.22 था. और यहाँ पे थर्ड EMI इंटरेस्ट अगर मैं देता हूँ तो वो तो 8% आ जाएगा, फोर्थ में तो 8 से भी कम हो जाएगा. सो फर्स्ट थिंग इज कि आई शेल ऑलवेज गिव हायर EMI, वॉलेंट्री हायर EMI, which directly goes to my principal, ताकि मेरा principal reduce होता जाएगा. If I can pay EMI of 100 rupees and my EMI is 80 rupees, I should pay EMI of 100 rupees, because my principal will start decreasing. So is my interest actual outgo will decrease. Second thing is, we can, if we have taken home loan, so almost 10% of the EMI, 10%, if my EMI is 100 rupees, 10 rupees I should invest into a mutual fund, which is giving me somewhere around 10 to 12%, which is always higher than the home loan interest. So by the time I will shell out money for my home loan for like 15 years or 20 years, I will be having higher amount in terms of earnings, which will be higher than the interest amount I have paid. So the rough calculation says if I have taken home loan for 30 years, then definitely I will end up paying, if I've taken home loan for 1 CR, I will end up paying somewhere around 1.75 to 2 crore rupees as total amount. So 1 crore is a principal, 75 to 1 crore is a interest. If I start investing 10% of EMI as into the mutual funds, which is giving us a 12% return, I will end up making more than 1 crore. That means जितना मैंने interest में दिया है उससे ज़्यादा I will make amount into it. So I can compensate my interest payment out. So these are the two major ways which people actually use to reduce their interest burden. And few people use mix of both.
Yes, sir.
I hope I answered your question.
Yes, sir. Yes, sir. Got it.
Got it?
Yes, sir.
Looks like everyone is कि यार बहुत ज़्यादा deep फंडे में चले गए आज. सूरज तो
No,
सोने ही
sir.
चला गया. सूरज तो नैप
नहीं
लेने
नहीं,
चला गया.
मैं नहीं सोने गया. ये रहा.
Ananya ma'am, good sleep. How was it?
Sleeping.
You're dreaming of bringing down the interest rates. They will come down. Don't
No,
worry. You don't have to dream.
dreaming of going foreign.
No, for that she don't have to dream. She is already sure about it. Maybe she was finalizing the schedule. What I'll be doing, where I'll be going, and all. Okay, chalo. I won't bombard you with more information today, because looks like कि ज्यादा हो रहा है. शरीन मैम की शक्ल देख के लग रहा है कि सर एक तो कल का पहले ही समझ में नहीं आया, ऊपर से ये क्या आप कहाँ लेके जा रहे हो. right? Chalo, let's quickly take the attendance and leave it for you. I mean, leave it for the day.
So while you're taking attendance, when will the next class be?
On a regular date, which is on Friday evening. So see, whenever I will not be able to take on the regular class, or when I want to take an extra class, now I'll keep on posting it in the group. If you say, let's say on Wednesday, just for example, on the coming Wednesday, if I have time and I want to take extra class, so I will ask you guys if you're okay for that extra class or not. If you say yes, we are okay, we all are available, I'll take that extra class. If everybody is not available, I will not take that extra class.
So then next week I'll probably come with a little bit of doubts because I missed the first half of the class.
You will miss the first half of the class.
So today's class, what happened just now, 2:30, I missed the first half, so I'll be coming with a bit of doubts next class once I revise.
Anytime, no issues at all. For doubts, I'm always open. I'll be happy to take your doubts because that is a learning process for me also. Right? So never hesitate to come out with your doubts.
Sure,
Okay.
sure.
Who is absent? 1, 2, 3,
Vedant.
4, 5, 6. Vedant is absent, and who else? Harsh is
Ayan
there.
was there,
Anil.
बस Ayan was there, अभी नहीं है.
हाँ बेटा, अयान आपकी क्लास में तो मेरी क्लास में भी है. चुप. Okay, so Ayan first half में Ayan को attendance दें, second में नहीं दें, ऐसा? चलो leave it. Let it be on both. ठीक है?
Yeah.
चलो.
Yes, sir. Thank you, sir.
Thank you, sir.
Okay, bye. Enjoy your day.
Okay.
Thank you, sir.
Thank you, sir.
Bye. For any doubt, you can always come in. No issues. बस group पे जब डालूं तब मेरे को respond time से कर देना so that we can plan classes.
Yeah.
Okay?
Yeah.
Sure.
Thank you, sir.
Okay.
Thank you.
Thank
Bye.
you.
Take care. Enjoy.